advertising, cloud, and AI. I mean, really, the key focus is what does spending look like? Is CapEx holding up? We believe it is. I mean, I think big tech this week is going to be more of a confidence booster rather than putting gasoline on the fire in terms of the fears. I think that's the important thing we're going to see from big tech. I think Alphabet was just sort of a little preview of what we're going to see this week.
The world is changing, and fast. We're witnessing the unraveling of decades-long globalization as nations turn inward, prioritize domestic strength, and reassert control over critical industries. Supply chains are being redrawn. Energy policies are shifting. Defense and infrastructure are taking center stage. In this era of rising tariffs, geopolitical tension, and the urgent push for national resilience, a new generation of market leaders is emerging. Companies that aren't just surviving the storm, but driving the transformation. This video is your front row seat to that seismic shift. We've identified 3 powerhouse US stocks that are perfectly positioned to thrive in this new world order. These aren't speculative bets or fleeting fads. These are foundational businesses, deeply rooted in essential sectors like defense, energy, and utilities, each with massive staying power, strong cash flows, and strategic advantages built for the long haul. They're tapping into the core themes shaping the future: domestic security, energy independence, and technological evolution powered by AI and electrification. And if you're looking to build a portfolio that's aligned with where the world is going, not where it's been, this is the video you can't afford to miss. Let's break down the companies that are set to lead the charge in this new economic era. In this video, we'll reveal 3 stocks that could outperform in today's rapidly changing economic landscape. First on the list is NextEra Energy, Inc., ticker symbol NEE, a company that seamlessly blends traditional reliability with cutting-edge transformation. In a world focused on energy security and reducing foreign dependence, NextEra stands out as a powerful long-term opportunity. As the largest utility holding company in the United States, with a $151 billion 0-cent market cap, it serves over 12 million Floridians through its regulated utility, Florida Power and Light. This side of the business offers essential, stable, and growing revenues, especially with Florida's rapidly expanding population. But what truly sets NextEra apart is its renewable energy arm, NextEra Energy Resources, the world's largest generator of wind and solar energy and a leader in battery storage. As energy demand surges, driven by AI data centers and widespread electrification, NextEra is uniquely positioned to lead the clean energy transition. U.S. tax incentives and infrastructure investments only add fuel to the company's growth engine. NextEra has raised its dividend for 31 consecutive years, growing it at an impressive 10-11% rate annually while maintaining a solid 3.1% yield and a payout ratio of around 66%. This makes it a rare combination of growth and stability in the utility sector. Next on the list is Lockheed Martin Corporation, ticker symbol LMT, a defense industry giant that stands out in an era of rising geopolitical tensions and increasing focus on national self-reliance. As global supply chains become more fragile and countries turn inward to secure their own interests, Lockheed Martin becomes not just relevant, but essential. With nearly 75% of its revenue coming from the U.S. government, primarily through the Department of Defense, the company enjoys a level of stability and insulation from international disruptions that few others can match. Over the past decade, Lockheed has grown its revenue from $40 billion, 0 cents, to $71 billion, 0 cents, achieving a compound annual growth rate of 6.4%. This growth is driven by mission-critical programs like the F-35 Lightning II, the world's most advanced and expensive fighter jet. The company's backlog currently sits at a massive $176 billion, 0 cents, offering strong visibility into future revenue. Additionally, Lockheed has raised its dividend for 21 consecutive years, providing investors with a nearly 3% yield and consistent annual dividend growth in the 7 and 9% range. While execution risks and program delays are always a factor, the company is firmly positioned to thrive in an environment where defense and sovereignty are prioritized. Rounding out the list is Devon Energy Corporation, ticker symbol DV, a top-tier US-based energy producer that sits at the intersection of 2 of today's most powerful trends: energy security and AI-fueled demand for domestic power. Devon focuses exclusively on the U.S. market, with operations across some of the most productive shale basins in the country. This domestic focus helps it avoid many of the geopolitical risks faced by international peers. Devon produces about 850,000 barrels of oil equivalent per day, with 42% of its reserves in oil and the remainder in natural gas and NGLs. The company's strong exposure to natural gas is especially timely as data centers increasingly turn to it as a bridge fuel while nuclear and renewables scale up. Meanwhile, Europe's push to rebuild gas reserves after reducing reliance on Russian imports further strengthens the demand outlook. Despite broader market volatility, Devon trades with a free cash flow yield of around 15%, suggesting a major disconnect between its stock price and intrinsic value. Management is aggressively returning capital to shareholders, with up to 70% of free cash flow being allocated to dividends and buybacks. Following its recent acquisition of Grayson Mills, Devon expects $50 million, 0 cents, in annual savings, further enhancing long-term profitability. In a world defined by energy independence and domestic resilience, Devon Energy stands out as one of the smartest plays on the board.